What does the market need more? A trade deal or a rate cut?
No, so I think I would agree we need more of a trade deal, or at least a reduction in the noise on the trade side. And I think reason why rate expectations have fallen so much and why the dovish tilt on the Fed came about, a lot of that is on the back of weaker economic data, which is trade related. So I think if we can get a breather on the trade side, I think everything, all the risky assets start to breathe more easily.
So the head of quant strategy at JP Morgan, Marko Kolanovic, who has had the ability in the past to make markets move, he says a deal on trade translates into a quick 5% rally in the broad markets and a 10 to 20% rally in value stocks.
Yes, so Marko and I work very closely together, and yeah, I fully agree. We're on board with that view. We think that basically value is basically sitting in recession territory. When you look at the discount at which value stocks are trading, it's basically in line, if not bigger, than late 1990s when we had that big growth TMT bubble. So yeah, if you have any sort of small catalyst, improvement in sentiment around trade, a Fed cut, even that, I think you could get some form of short squeeze. So we're really calling this more of a tactical trade. We don't necessarily see value outperforming now for a year.
You think growth in the long term is still the place to be, but
structural
sort of
reasons.
Tactically, if you want to use that word, value can give you a big pop in a very short period of time.
Absolutely.
Or if you're an institutional investor that can only invest in value stocks, so obviously JP Morgan, as well as many others, have portfolios that can only be in value. You can't pour more capital into them right now. I mean, at this point, obviously, they are in recession territory. And so if you have high conviction in certain value names, this is the time you want to be scooping them up for sure, especially if, you know, you have to be a small cap value manager or a large cap value manager. This is the time, if you're a pension fund, you should be putting money with those guys ultimately to essentially buy the bottom if there is such a thing.
Yeah, you're the value guy.
Yeah, well, listen, I'm looking to what...
Does that make sense to you? Because
that helps that portfolio, Jim?
It sounded like before the show, Dubravko, you were saying 20% pop in value stocks easily, I think was your word.
Value,
I don't want to misrepresent what you said.
Yeah, correct. I mean, you look at value. Value is trading not just at the levels it was trading at in December, when the market was down almost 20% or more. It's actually in many cases trading below. And the market is at 29.
I know you focus more on the technical and the quant side, but the fundamentals make sense. I mean, this is not rocket science to figure out that if you get a trade deal, then animal spirits return to the overall economy. So you get a pickup in basic material demand. You should see pricing go higher. Mining and metal companies go higher. Same thing with energy. We'll get to today's news later, but you should see demand for oil and natural gas go up. With that, the XLE, the XOP goes up. And then finally, and I'm talking about the major sectors of value, you should see some sort of rise in 10-year and longer dated bonds that should resume some steepness to the yield curve, and that benefits financials. I've just covered three of the major sectors of the value area that fundamentally should perform in a trade deal.
Doc, where do you stand on this market right now?
Well, since I'm
Are we overly reliant on the Fed? I keep saying this coming to the rescue. It seems to be what this is all about in June.
We are likely just to get, jawboning by the Fed at this meeting. I think universally around the table we'd say that. I'm one of the folks that's been in the camp for almost 2 months now saying we will get a July rate cut. I still believe it'll just be 25 basis points, not the 50 that some folks
some are throwing 50
called out there. But I think that'll be something that potentially drives us in July. As far as the jawboning, is it enough to take us to a new high here? I think in many cases the market was oversold so severely and so quickly on that 1 week period that we came back just as quickly.